Hello and welcome to the Voodoo free video for Monday, June 9th. This is David, and I want to talk a little bit this evening about some mixed messages that we're getting from the market. We've got some relatively compelling bullish signals, and we have a few emerging cautionary signals. Now, these don't necessarily contradict each other, and I think they can coexist, but their coexistence paints, I would say, a little bit of a nuanced picture of what we might see over the next couple of weeks. And that's what I want to talk about. Maybe we'll talk about how we're playing it in the Voodoo Mastery Room as well. So let's talk first about this Voodoo fire line, right? So this is the most important of the Voodoo line levels. Now that doesn't mean that it's impenetrable. We had trouble getting through it here in May, but here in June, we pushed through and really since last Monday have effectively stayed above it for a few moments here last Thursday on a drop. We came down and dipped below it briefly, but held on the close and are holding above this important level. That holding that level of support would keep the focus bullish based on Voodoo Line's roadmaps. And that's one thing here that will keep the focus up at least so long as we stay above that level. Now, the next thing I want to talk to you about is this blue line in here, right? So this is the cumulative breadth line from the NYSE, right? So it's just the total net advancers less decliners on a daily basis that you might look at, and they're just added together. So on a day when there are more advancers than decliners, you'll see the line go up. And on a day when there are more decliners than advancers, you'll see the line go down by the amount that one is greater than the other. This line was a strong warning of the type of decline that we had here February into April, right? One of the really most reliable warning signs of a big sell-off are cumulative breadth divergences. That's when we make higher highs in price and have lower highs in the cumulative breadth line. We had that going on when we first started to turn down from that February all-time high, and it remained in place when we broke that important fire line, and that had to focus on the downside. Now, perhaps not quite as reliable a sign as the cumulative breadth divergence is for bearishness. What we do have here is we have the cumulative breadth line leading price to the upside. That is, back here in late May, we made fresh all-time highs in cumulative breadth when the index hadn't made those all-time highs yet. And in here today, we made new all-time highs yet again in this cumulative breadth line. And when that leads to new highs above price, that is generally pretty bullish. Again, not quite as reliable as the divergences are for bearishness, but it's yet another reason to think that at least on a long-term basis, that the prospects for this index are good. But I mentioned the mixed messages, so let's look at those, right? And they really come from this big picture oscillator down here. Now, this is an oscillator I invented that when I was seeking something that was going to perform better than the S&P short range oscillator that a lot of folks use, right? You hear it talked a lot about in media. Folks talk about not buying when that is overbought, right? Coming in and stepping in and buying when the oscillator is oversold, like it was here at the April low. Of course, that S&P oscillator, I think, is something like $500 a year, which is fine for something that's a great tool. But I thought we could find something better, and I think this is better. Now, right now, this very moment, today, we see this big picture oscillator bouncing up ever so slightly overbought above this one line. So above one is overbought with the big picture oscillator, below -1 is oversold. Different from the S&P oscillator, where above 4, which the S&P oscillator got to today, right? So they're both nosing ever so slightly into overbought today. So there are some similarities in these oscillators, but some important differences as well. This one is a little bit faster, and at the all-time high, you can see the big picture was overbought, the S&P wasn't. But let's focus on the big picture oscillator and what it's telling us, right? And it's saying, hey, we could get a pullback sometime soon, or maybe at least slow down in the advance. We don't have to, right? We started to nose into overbought here, and we kept going up in overbought and stayed in overbought for a while. So just because we're starting to nose up into that area doesn't mean that this market is about to turn. It just says, hey, maybe now isn't the best place to buy. Let's wait until we get a pullback. So if we look back at the first few times we tried to get above the Voodoo fire line here in the S&P 500 up from those April lows, we couldn't get through. And in those attempts, right, you can see that the oscillator was still in overbought territory until we came down, worked off that overbought condition, and then we were able to get up through when in here when we weren't so overbought. So these pullbacks were a better time to buy outside of the overbought area, and we wait till we get above. So am I constructive now? Yeah, I am. Because even though we're nosing into overbought territory, we are above that Voodoo fire line. So here's the message I want to take from all of this, right? And that is, I want to stick with bullish positions that I'm in. And if we come back below Thursday's low, pretty much right here at that fire line, a few points below, then I'm going to maybe take some profit on short-term bullish positions. I think we still have some more upside. I think the overall message, and I can't know for sure, I don't see around corners, but I think the overall message from all of this is that we have a little bit more upside, right? But that it's likely not going to be as swift as we saw in here through the middle of the move. Everything sort of conspires to say that, but I don't want to rest only on that. So if we do dip below the fire line, at least the short-term pieces I'm going to get out of, stuff that I have from a lot lower, I'll wait and see if things actually organize into a downtrend and bounce into resistance below the fire line and start to turn before getting out of those. But short-term stuff, like positions that we have from last Monday and from the Friday before that, we bought on pullbacks both of those days for reasons, right? We had pulled back out of overbought, and we got nice pullbacks that had counter trend structure that let us get in. So I am worried that things might slow down. We bought some call debit spreads here in SPX last Monday, and then late last week after we had rallied up, right, we were buying this 6150 6200s for 30th of June, right? And I think we paid something like $475 for those, right? So they were pretty inexpensive because we were getting them on a day when we were selling off down here last Monday, and then we turned around on Friday and used the bounce to sell the 6200 6250 call credit spread against those, turning what was just a simple vertical spread into a butterfly centered at 6200. But because we legged into that butterfly, recognizing that maybe we don't get all the way up there, in which case we might lose some money. If we hang if we hung on to it, right? But still wanting to be positioned bullishly by selling this call credit spread for 750 for 275 more than we paid to buy this debit spread. We actually have a total net credit of 275 for putting on this fly, even if we're totally outside of the range of that butterfly at expiration. We're still going to walk away with that 275 profit per spread. So I kind of like that. And then if we still go right up to that 6,200 area, we'll still make a huge bunch more than that. So those are the sorts of things that we're doing in the room live to try and try and process what all of these signals are telling us together. Of course, we loop a lot of other stuff into it as well, but I thought you might find that interesting, as well as an update on the big picture. So that's what I have here for this evening. I'll be back with you next Monday for the next free video. And until then, as always, good trading.